The Rebel Capitalist Show.
Let me just go and start by getting kind of what you're thinking about right now as far as macro, maybe pertaining to the United States and inflation, interest rates, yield curve control, and then we'll kind of expand on that.
Well, as you know, we have artificial stimulus in the form of expansionary monetary policies, where the Federal Reserve's balance sheet has expanded by close to $4 trillion over the last 12 months.
Right.
And other central banks are also printing money and expanding the balance sheets. And at the same time, we have now fiscal expansion. In other words, Biden's stimulus packages where money is being handed out, or under the pretext of infrastructure expenditures, money is being stolen by politicians for their own agenda. So basically, we have an artificial economy. It's not the normal economy that moves on its own, but it requires this artificial stimulus. And what this artificial stimulus has done, admittedly, it's propelled the S&P and other indices to the highest level ever in the United States. And even recently emerging markets have performed very well. And European markets have also begun to perform well. So stocks are okay. Property prices have gone up again, and in some areas substantially. In the main cities not, and not for commercial properties that are maybe a third empty. And for housing in the center of cities, that hasn't done well. But in the countryside, it's done very well, as I expected. And we have, of course, these artificially low interest rates, where bonds are very expensive. In Europe, you still have close to a third of the government bonds having a negative yield. In the US, we had a rout in the government bond market for the last, say, 3-4 months, where the yield on the 10-year Treasury has more than trebled from the lows in August 2020. So now the question comes up, what happens if this artificial stimulus stops? Or will this artificial stimulus continue? And as in economics, as is the case in economics, in order to keep its momentum, will it have to be increased over time? So this is a very, is more a political question. And I'm afraid to say that this artificial stimulus has actually worsened conditions for many people. It's improved the conditions of the 0.01% of the population that are big shareholders, big property owners, and so forth. But the normal guy on the street, what I would call the average person, the typical person worldwide, is still suffering very badly from the crisis that was induced by governments. It wouldn't have had to be this bad, but governments with their continuous intervention and they know it better attitude and their arrogance and viciousness, they have destroyed the lives of millions of people that have lost their businesses which they had built up with accumulated savings. These businesses will not come back.
Yeah, that's right. And let's go back to the kind of the plight of the average Joe and Jane. I read a study that incomes in the United States, and this was a study done by the government, the Bureau of Economic Analysis, I believe, from Q1 to Q2 in 2020, average incomes in the United States actually went up by 30% because just from Q1 to Q2 because of the additional stimulus and unemployment benefits. But to your earlier point, are we building the entire economy around stimulus checks? So the entire demand side of the equation is government spending. And what comes to mind there is Venezuela, because you've got an economy that's completely built around one thing. And when Venezuela, it was oil. So when the price of oil goes down, so does the whole economy. They've got to print to get their way out. You get hyperinflation. But is the United States doing the same thing in the sense that they're building their entire economy around one thing, and that's stimulus? Therefore, it becomes a political question that the economist and the investor has to ask themselves: do we get more stimulus, less stimulus, no stimulus? And that answers all the questions that you need, to figure out what to do with your portfolio.
Well, I think we'll get more stimulus because once you went down the path of money printing, the Fed has been expanding its balance sheet for the last 30, 40 years, but
Right.
at an accelerating rate since the great financial crisis in 2008. But that has to continue, otherwise the system collapses. They tried to normalize it between 2018 and August 2019. They tried to reduce the balance sheet. But then in 2019, in August, there were some problems in the repo market, as you remember.
Right.
And then immediately the Fed decided to flood the system again with liquidity. That was long before COVID-19 became an issue. So we can see it's once you embark on money printing, it's very difficult and only possible under great pain to do it. And the US, with its woke society, where even large corporations are now becoming woke,
Right.
will not do that.
Yeah. So the answer is yes. We're continually, we've built an economy now around government spending and stimulus, but I always look at it as a heroin addict, in the sense that the heroin addict starts to take the drug and they get more and more addicted.
You're talking about Hunter Biden or what?
Well, I'm talking about the U.S. economy. And
he is a typical representative of the U.S. economy, with a dad who runs the country.
Right.
That's America nowadays.
Yeah. Well, when's the last time you were in the States?
2 years ago.
Well, I don't spend much time in the States, but I've been here over the last 6 months, and I can almost assure you that if you came back today, you wouldn't recognize it. You
Well,
would
I
not
would, because
recognize it.
already 2 years ago, I was treated like a criminal if I had a cigarette somewhere.
Oh, you can't even imagine what it's like now. But now you've got 10 times more homeless people. I mean, I'm in Tucson right now. It's everywhere you go, especially downtown. It's homeless people. It's people addicted to drugs. And you've got that. And then you go to downtown Scottsdale, and every single person is driving a Ferrari. Those are the two. Seriously, those are the two groups of individuals that you have. And that's what this has done. That's what this one-trick pony economy has produced, that is dependent on government stimulus. But to your point, it's like the heroin addict. They need more and more and more of the drug to get the same effect. So assuming that that's what the American economy's future looks like, how does that play out with interest rates, with stocks, and then with the dollar, of course?
Yes, I mean, stocks can go up a lot more if you keep on printing money. The escape valve is then a dollar that weakens. But you understand, if the other central banks do the same, namely print money, or even more so like the Turks did or the Brazilian did, then the dollar could be strong against some currencies, but it will go down against precious metals and cryptocurrencies.
Right, or goods and services, yeah.
That will happen. The bond market will, of course, weaken at some point. It's actually interesting. The dollar has been strong, but not that strong considering that I can buy now a US Treasury for 10 years at the yield of 1.7%. And in Europe, in Germany, I get a negative yield, or in Switzerland. You understand? The yield differential has grown dramatically, and it hasn't made the dollar much stronger. So if we think this through, then if the interest rates in the US came down again, and I happen to think that the economy is not as strong as the market is perceiving it to be, then I think the 10 years, if they go down to say 1.4, 1.3% from the 1.7, I think the dollar will weaken again.
So you see the long end of the yield curve actually coming back down more. You think
Yes,
the
I think
inflation
so.
pressure will take hold
But
again?
yes, I think as a contrarian trade, I think the 10 years looks quite attractive to buy, but not for the long term. You understand? It would have been for a trade where, say, you buy, there's an ETF, the TLT. If you buy the TLT today, I think it could rally 10%.